Hey everyone, first of all wish you a very happy Independence Day. Now the last 1 year has been tough for the stock market. Many stocks have seen sharp corrections from their highs. And naturally there is a fear among retail investors. Many of you would be confused about what to do with underperformers in your portfolio. So on this Independence Day, I thought of doing a very interesting exercise. When we talk about ace investors, the conversation is almost always about the multi-package stocks, the ones that turn small investment into massive wealth. We celebrate those stories, share those charts, and dream of finding the next big winner. In fact, during the bull run, every media headline is filled with their stocks that delivered stellar returns. But here is a question we rarely ask. Do ace investors also have underperforming stocks in their portfolio? The ones that fall 40-50%, sometimes even more. And when that happens, what do they actually do? Do they panic sell like most retail investors? Or do they treat these corrections as opportunity to accumulate more? That's exactly what I've researched for this video. I've gone through the portfolios of some of India's most successful investors and identified stocks in their portfolios that are currently well below their 52-week high. And just to be clear, we are not considering their buy price here. They might have entered at lower levels, but the purpose is to see if ace investors also have underperformers that have fallen significantly from the highs and what we as retail investors can learn from that. Please note, it is not a buy or sell recommendation, it's a learning exercise. Trust me, by the end of this video, you will have a lot of learning that would help you in your stock market journey. Alright, let's get started. Okay, let me first share the process behind my exercise. So what I've done is, I went through the entire stock holding of these ace investor. For instance, this is the entire holding of Mr. Ashish Kacholia. You can see there are a lot of stocks in his portfolio that he has been holding for a very long period. Likewise, I went through the entire holding of Mr. Mukul Mahavir Agarwal. Then third ace investor I identified as Mr. Ajay Bhadviya. I went through his entire portfolio. Next is Dolly Khanna. Again, I went through the portfolio. And last is Mr. Anil Kumar Goyal. He also holds a lot of stock in his portfolio. Then what I've done is, I have identified companies that have underperformed from their portfolios and I have listed down them in the Excel tracker. So for example, this is the list of Mr. Ashish Kacholia holding. There are around 10 companies. Then what I've done is, I've identified the market cap, then holding period. Since how long he is holding the stock, what is the percentage allocation, what is the 52-week high, what is the current price, and of course, what is the percentage change, and finally, what is the trend. That is what they are doing with their stocks. For example, first name is Aeroflex, where he is holding stake since 8th quarter. Currently, he is hold around 2% stake. It's down by 32% from all-time high. Now, what Mr. Kacholia is doing is actually increasing stake in the company. Second name is Agrawal Industry, where he is holding stake since 12 quarters. He's got 4.3% stake, down by around 32%. Again, he's increasing stake in the company. Next is AWFIS, holding since 5 quarter, down by around 41%. He's actually decreasing stake in the company. Next is Brand Concept, a microcap company, holding it since 7 quarter. It's down by around 60% from all-time high level, and Mr. Kacholia has kept the stake constant in the company. Next is Carousel, which is one of his oldest holding. He's holding it since last 35 quarter, which is nearly 9 years, and he has got 3.5% stake. Basically, although from the 52-week high there's not much correction, but the stock has not generated any return in last 4 years, right? So what he has done is, there was slight reduction, but he's holding the same allocation since last 4 quarter. Next is Finiotex, holding since 14 quarter, down by around 47%. There's a slight reduction, but same holding in last 4 quarter. Next, there's a very small company, nano cap company, Radiowala at 43 crore market cap, holding 7.78% stake, down by more than 50%. He has kept the stake constant. Next is Sanjeevani Parental, again a micro cap company, holding since 6 quarter, down by around 47%. He has done slight reduction, but holding it same allocation last 3 quarter. Next is Tovcraft, holding since 14 quarter, down by around 40%. Again, constant stake. And last is Zegel, holding since 8th quarter, down by around 38.5%. He's slightly increased stake, then decreased it, but again increased stake in the latest quarter. Next, if you look at Mr. Mukul Agarwal, there are a lot of stocks again in his portfolio, but then look at this. Alcargo Gati is holding since 22 quarters. That's nearly 6 years. It's down by around 48%, but he has kept the stake constant since last 5 quarter. Next is Apollo Pipe, holding since 30 quarters. It's down by around 45% from all-time high. What he has done is slight reduction but kept the stake constant in last 3 quarters. Next is Arman Financial is holding since 36 quarter. Please note that we have got the data available only for last 36 quarter. So he might be holding stake for more than that period. He's got 3.8% stake. The stock is down around 47% from all-time high level. What he has done is he has done certain reduction but kept the stake constant since last 6 quarter. Next is Capacit Infra holding since 10 quarter, down by 40%. Slight reduction but kept the stake constant in last 3 quarter. Indocount. This is one company that has seen a sharp correction recently after the US tariff thing, and he is holding since 22 quarters, down by 44%. Slight increase he has done but kept the stake constant in the last 3 quarters. Lux holding since 5 quarter, down by around 48%, constant stake in last 4 quarters. Likewise, Oriental Rail holding since 6 quarter, one of the sharpest fall, nearly 60% down, slight reduction quarter on quarter since buying. Next, there's a company called PDS holding since 30 quarters, and it's down by more than 50%, again slight reduction. Prakash Pipe holding since 7 quarter, down by more than 50%, slight reduction. Stainless Life Sciences holding since 4 quarter, down by more than 40%, but he's kept the stake constant. Likewise, Sula Vineyard holding since 11 quarters, down by more than 60% from all-time high. He has consistently reduced stake in last 4 quarter. Suryoday Small Finance holding since 11 quarter, down by around 38%, kept the stake constant. Then Theoj Engineering holding since 12 quarter, down by around 35%, again constant holding. Then Traxon Technology, microcap company holding since 11 quarter, down by more than 50%. Now here there's a slight reduction basically because of equity dilution due to ESOP. Then last stock is Vidhi Specialty holding since 16 quarter, that is 4 year, down by more than 30%, slight reduction but constant stake in last 4 quarter. Next, if you look at Dolly Khanna portfolio, there are 4 stocks. MK Global, which is down by more than 40%. What she has done is there's a slight increase and then kept the stake constant in last 3 quarter. KPC Sugar, a very small company, holding since 8 quarter, down by 50%. They are consistently increasing stake in the company. Next, Prakash Pipe holding since 15 quarter, more than 50% fallen. Now what they've done is they've increased their stake quarter on quarter consistently, but slight reduction in latest July month. Then fourth is Rajshri Sugar, a very small company, holding since 8 quarter, down by 50%, but they are increasing stake in the company. Next, Mr. Ajay Upadhyay, DCS System holding since 7 quarter, down by around 38%. But what he has done is he has consistently increased stake in the company every quarter. Then Dollar Industry holding since 4 years, and it's down by 36%. Slight reduction happened, but the stake is constant since last 7 quarter. Then Kirloskar Electric, he's holding since 5 quarters, down by around 48%. What he has done is there's a slight increase, then slight decrease in latest July quarter. Next, a very microcap company, Maral Overseas, holding since 4 years. And if you look at it, down by around 38%, constant holding. Next, Precision Camshaft, holding since 4 years, down by more than 50%. And what he has done is increased stake and now constant in last 7 quarter. And last, Vascon Engineer, holding since 8 quarters, down by around 37%. He has increased stake in the company multiple times. And last is Mr. Anil Goyal. Basically, he's an ace investor who is known for buying very deeply cyclical company and like your textile, sugar companies, but he is known for buying them at very low level and known for holding them for a very long period. I mean, look at the holding period like 36 quarter, 25 quarter, and mind you, 36 is what we have got the data. He might be holding it for even longer than that. Another thing is the market cap of these companies are very small. So if you look at it, Amar Jyoti Spinning Mill, just 100 crore market cap, holding since 36 quarters. Has got 6.7% stake, down by around 40%. But what he has done is slight decrease but constant in last 4 quarter. Next is Awadh Sugar, holding since 33 quarter, down by around 48.5%, consistent increase in holding. Next, Dalmia Bharat, holding since 24 quarter, down by around 40%, consistent increase in holding. Then DCM Novelle, 17 quarter holding, down by around 39.6%, again constant holding. Next is Dhampur Bioorganic, holding since 11 quarter, then down by 57%, constant holding. Then next is Ganesha Benzoplast, holding since 6 quarter, down by 50.5%. But what he has done is he has consistently increased holding in the company. Next is KG Denim, a very nano cap company, holding since 36 quarter, again down by more than 70%, but he has kept the allocation constant. Next is Karnataka Bank, holding since 4 quarter, down by 30%, slight increase in holding. Then next is Magad Sugar, 25 quarter holding, down by 50%, consistent increase in holding. Likewise, Nahar Capital, Nahar Spinning, down by more than 50%, 70%. Again, he has consistently increased stake. And last is South India Paper, holding since 36 quarter, down by more than 50% from all-time high. And he has kept the allocation constant in last 10 quarter. So what's the takeaway from this exercise? Well, first learning is ace investors don't chase the noise. They don't get distracted by daily market headline or social media chatter. They focus on business, not just the stock price. If the fundamentals remain intact, short-term volatility is just background noise. Second learning, they play the long-term game. Many of their biggest wealth creators took 5 to 10 years to deliver outsized return. They understand compounding works best when you give it time. Third learning, they know when to cut losses. Patience is important, but blind hope is dangerous. If the core business fundamentals weaken or the thesis break, they are not afraid to exit even at loss. That's where tracking your companies become critical. I know it's tough for me to do a follow-up on every single stock we have discussed in the past video, but I make sure to cover them in my weekly video series where I monitor over 200 companies. It helps me spot both new opportunities and portfolio risk early. By the way, on this Independence Day, I've added a special discount for that series. Details are in the pinned comment. Then fourth learning is ace investors are contrarian when it matters. They buy when others are fearful, even during crashes, if the valuations and business quality matches their criteria. They don't mind looking wrong in the short term if they believe they'll be right in the long term. Fifth learning is they understand the risk appetite. Many ace investors can tolerate big drawdown because they're investing surplus capital. Retail investors must remember, you can't copy their risk taking blindly. Your financial situation, age, and responsibility matters a lot. And sixth learning is they stay financially independent. They are not pressurized to sell because they urgently need money. This is a big reason they can stay invested long enough for their conviction to pay off. For retail investors, this means building an emergency fund, so you are never forced to sell at the wrong time. And since today is Independence Day, let me leave you with this thought. True financial freedom does not come from luck, tip, or shortcuts. It comes from discipline, conviction, and patience. So instead of chasing the next hot tip or panicking during correction, focus on building a portfolio that you really understand, that suits your risk appetite, and that you can hold during ups and downs. Because in investing, just like life, conviction, discipline, and patience are the real superpower. That's how ace investors win, and that's how you can too. So this is it from this video. If you find this video useful, do share it within your circle, and for more such research-based content, subscribe to this channel. Also, let me know if you want me to discuss any topic. I'll see you next video. Till then, take care.